Kenley Limited is a merchandising company operating in Kenya. The following transactions were extracted from the company's record during the month of September. So the first one, you're being told the sales at standard rate, the figure is 6 million. The figure is 6 million, 199,997. So we have export to Egypt, the figure is 800,000. We have purchases at standard rate, the figure is 4 million. We have purchase of oil and fuel for delivery van, the figure is 360. We have repair of office furniture, that is 64,000. We have audit fee, 160,000. Salaries and wages, we have it as 140, salary in the 1,480,000. We have purchase of stationery, the figure is 68,000. We have electricity bill for the month, and we are being told not paid. The figure is 56,400. Then we have the legal fee, which is 48,600. Then you're being told that purchase from traders not registered for VAT, the figure is 580,000. Then we have what you call the zero rated sales, the figure is 480. So on the additional information, number one, you're being told that the VAT accountant established that the standard rate were understated by 20%. Then you're being told that the sales at standard rate include goods valued at 278 sold on credit to a customer who was declared bankrupt. Then we're also being told that a customer returned goods sold at standard rate at 58,000 to a company, and the credit note was issued immediately. Additional information number 4, credit suppliers issued a debit note in respect to suppliers at a standard rate amounting to 580,000. Then you're being told that the accountant also established that an invoice of 480 from foreign supplier was not recorded in the books. The import duty for these goods were at the rate of 20%. Then repairs of furniture was carried out by a local carpenter not registered for VAT. Then we have, from there, transactions are inclusive of VAT, meaning VAT is already charged. So what do we apply when you're told transactions are inclusive of VAT? Transactions inclusive, that is C. Transactions inclusive. When they say inclusive of what you call of VAT, we have it as 16 over 116%. 16 over 160. 16. Very important, this point is not normally not captured, but that is, you can have all the analysis as pertaining to the equation, but if that point is not properly spelled out, then the whole concept becomes very null. So then we're being told that compute the value added required, compute the value added tax payable or refundable to Kenley Limited for the month of September. So 2 analyses that we derive from this question. One is that this question do not have an exempt sales. If it does not have an exempt sales, then therefore we can use the VAT account, and there's not restriction in this particular question. So we begin to have the analysis. On the analysis of it together, we are being told the following transactions were extracted from the books company's record during the month of September. So sales at standard rates, that's an output VAT. So we charge VAT on that. Export is output, but it is zero rated. Then we have purchases at standard rate. That is an input. We claim VAT on that. Purchase of oil and fuel, that's also input. But remember, as at 30th June 2023, the VAT for oil and fuel was affected to 16%. So particularly for this question, we apply not 8%, but we apply 16% because that is after the changes were effected. Repairs of furniture is an input VAT. Audit fee is an input VAT. Salaries and wages, the figure of 1,480,000, that is exempted from tax. Then we have stationery, that is an input VAT. Stationery is an input VAT. We have electricity bill for the month not paid. We are still going to claim, that's an input VAT. Legal fee is an input VAT. Then purchase from traders not registered for VAT. If you purchase from traders that have not registered for VAT, if you purchase from traders who have not registered for VAT, what happens is that, you cannot claim VAT on those. So for purchases from traders not registered for VAT, we don't claim it on the input because they were not registered. Then zero rated sales, we charge VAT, not claim, but we charge VAT at 0%. So the first additional information. So we're being told that the VAT accountant established that the standard rate purchases were understated. So as our working, we just provide as working 1. So standard rate purchases. We can make that adjustment. So standard rate purchases, the figure was 4 million. So a figure of 4 million. So this figure of 4 million, we are being told was understated by 20%. If it's understated by 20%, it implies that that is 80%. It implies that the figure is basically 80%. What is the whole figure? The whole figure should be 100%. 100% without understatement, so that we have 100 over 80 times 4 million times 4 million. So what do we have for that? We pick our calculator and get the correct figure. So the correct figure should be 100 over 80 without understatement. You have to adjust that times 4 million. So that means that purchases, the correct figure is 5 million. So we can have the understated figure, which is 4. Then you get the understatement unaongeza tena to the VAT, but we just have it as a whole as 5 million. This is where we are going to claim VAT. So then we are being told that the standard sales at standard rate include goods valued at 278,400 sold to a credit customer who was declared bankrupt during the month. When a person is declared bankrupt during the month, the most prudent thing is not immediately you are going to claim for what you call a bad debt relief, meaning that we are going to less the VAT on that. Then you're being told that 3 customers returned goods sold at standard rate or at shillings 58 to a company, and the credit note was issued. So credit note issued, that's a reduction to the output. And for this case, you can also put it on the input side. But if you put it on the input side, we know that basically that would be a positive value. That would be a positive value. So we're being told that suppliers issued debit notes in respect to suppliers at a standard rate amounting to 580. That is debit note received. That is on the input side. So 6, we're being told that the accountant established that an invoice of 480, that's an import, that's an import. That's an import. An import established that of 480 from foreign supplier was not recorded. The import duty was 120. So we get it. So we have 480 without the import duty. 480 without the import duty. That is basically 100%. So with the import duty, we know that that should be 120 plus 20. Instead of getting 20%, that should be 120 for the import duty. So that we stretch to this other end. We have it as 120 over 100 times 480. This was not, remember, this was not, omitted, was not recorded, meaning it was omitted. So that import, essentially, that should be 120 over 100 times 480. Times 480. So we have 576. But very key to understand on import. Particularly, even if the question is inclusive of VAT, imports are normally exclusive. Imports are exclusive. This is exclusive of VAT. Though the question is inclusive of VAT, we know particularly for that question, we are going to use 16. For that point, we're going to use 16 over 100. So being told that repairs of office was carried out by a local carpenter, not registered for VAT. Back to that we said an input. So if you're told repairs of office furniture was done by a local carpenter, not registered for VAT, then you're not going to claim it. If you want to claim it, then that needs to be done by an individual who is registered for VAT. We lay an emphasis on additional information number 6. Repairs of office furniture carried out by a local carpenter not registered. Again, we just emphasize that, if a service is carried by a person who is not registered for VAT, therefore you cannot claim it as an input VAT. And we have, lastly, transactions are inclusive of VAT at the rate of 16% where applicable. At the rate of 16% where applicable. So we say compute value added tax, that is VAT payable or refundable by KASNEB Limited. And I say this because we do not have an exempt. We carry out this using what we call a VAT account. We carry this using a VAT account. Using VAT account because there's no restriction. I would use the two sides. We just clean this and have the two sides on this for the VAT as a whole, so that we just have enough space for it. So KASNEB, we say KASNEB, call it KASNEB Limited. So we have the VAT account, VAT account for, we call it for September. We call it for September 2023. For September 2023. So we have what we call input. This is input. And then we have the output on this other end. Output. So we can have that output VAT, and then we have the input VAT. Input VAT. So we have item. We have what you call amount. The VAT rate. Then we have the VAT. So we have item, we have amount, we have the VAT rate, and then we have the VAT. We have the VAT. And then we have the VAT. So then the first item is standard. That's an input. So that's an input. We have standard rate purchases. So we did the working. That was we adjusted to 5 million. That should be 5 million. It was undercasted. So 5 million. The VAT rate is 16 over 116. 16 over 116. So we have that. Standard rate purchases. So that is 5 million times 16 over 116. So we have 689, 655. 689, 655, 689, 655. Then we skip some. We skip the standard rate, sales at standard rate. Sales at what we call standard rate. Sales at the standard rate, that is 6,199,997. So the rate is 16 over 116. The rate is 16 over 116. So that's 6,199,997 times 16 over 116. So that should be 855, 172. 855, 172. So we have export to Egypt. Export We have it as Egypt. So export to Egypt, the figure is 800. Exports are 0 rated. Don't put a dash. On that particular one, we don't put a dash, but 0 rated, that should be 0. We have the next, what to call purchase oil and fuel. We have oil and fuel, which is an input. Oil and fuel, oil and fuel. We have it as oil and fuel. So oil and fuel, that is 360, 360,500, 16 over 116. 16 over 116 oil and fuel, that is 360, 500 times 16 over 116. So that should be rounded off to all number. That should be 49, 724. 49, 724. Then we move to the next. We have what we call purchase of office furniture. So the office furniture, additional information number 6, they were done by carpenter, not registered for VAT. Then we move to audit fee, which is an input. Audit fee. So audit fee. So audit fee is 160. 160. 16 over 116. So audit fee is 160. So we say 160. Why do you use 16? Because it's inclusive. So times 16 over 116. So that should be 22,069. 22,069. 22,069. The next we have what we call salaries and wages, that is exempted. Even if you put it, that will just be a dash that is exempted. We have stationery. The next is what we call stationery. Stationery. So stationery is 68. 16 over 116. Stationery. Stationery, that should be 68. That's 68 times 16 over 116. So for the stationery, we have the figure is 93. 93.79. We have 93.79. So then we have electricity. The next is what we call electricity. Electricity. So for the electricity, we have 56,400 times 116. So electricity, even on credit, we charge VAT. So that's 56,400, 16 over 116. So the figure is 7,779. So we have legal fee. Next is what we call legal fee. So the figure for the legal fee, that should be 48,600, 16 over 116. So that should be 48,600 times 16 over 116. So we have 48,600 times 16 over 116. So that should be 6703 to all numbers. 6703. That is for the legal fee. Purchase from trader not registered, we don't claim. So then we have the 0 rated sales. 0 rated sales. So for the 0 rated sales, we have 400. 400 as at that. 0 then 0. So being told that purchase was VAT accountant established that the standard rate purchases were understated. The figure was already effected at that point. Then you have sales. Sales at standard rate included 278 sold to a credit customer who was declared. So that's a bad debt. Bad debt, we can have it as a positive or we have it as a negative. So bad debt, the figure is 278,400. So 16 over 116. So 278,400 times 16 over 116. So that should be a negative 38,400. 38,400. That should be 38,400. Then we have the next, a customer returned goods sold at standard rate. A customer returned goods sold at standard rate. So returned goods sold at standard rate. At 58, the company issued credit note was issued. So we have what you call a credit note issued. What you call the credit note issued. So we have 58. 16 will less that credit note issued. So we have 5800 times 16 over 116. So that should be a minus of 8,000. So that's the credit note issued. These figures, we can have them on the input because this is a VAT account. But when you have them on the input side, then they should be positive. Then they should be positive. Then we have what you call a credit supplier issued a debit note in respect to suppliers at standard rate of 580. So that's the credit note. Debit note received. We call it debit note received. So debit note received, the figure is 580 times 16 over 116. So a credit supplier issued a debit note in respect to suppliers of standard rate. So debit note received, that is 580 times 16 over 116. So that should be 80. So then we have the next, we are being told that was import. So we have import was omitted. That was import. We have an import which was omitted. Import, we did our working. The working basically is 576. That is import plus a import duty. So 576. But remember, imports are normally exclusive. So we use 16 over 100. So we have the 576 times 16 over 100. So that should be 92,160. So 92,160. So we have our VAT account. So repairs of furniture was carried out by local carpenter. We can't claim. So we get the balancing figure in order to get whether we have a VAT refund or VAT payable. So we get the input side and the output side. Automatically, the input side is bigger. So that is 689, 655, plus 49, 724, 724, plus 22, 069, plus 93, 79, plus 7779, plus 6703, plus 80,000, plus 80,000 plus 92,160. So that should be giving us about 957,469. This figure can vary, especially when a student uses this as a positive. The figure would definitely vary, the balancing figure. So we have 957,467. What is the output alone? We can just have that figure for the output alone in order to know. So that was 855,172 minus 38,400 minus 8,000. So that should be about 808,772. 808,772. So minus that. So 957,467 minus an answer. So that should be VAT refund. And that is called the balancing figure. So the balancing figure, that should be about 148,695. That's a refund. That is the refund. So the key things are basically the entries. The entries are the most important. Like for this particular question, we have about 12 marks. How many entries do you have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So any 12 entries, that should give you the whole mark. A lot of times the emphasis is on the answers, but emphasis is not on the answer. The emphasis is basically on the entries. So that is how we basically tackle question 2, that is April 2024 blocks.